Hello everyone, this is CA Suraj Junjunwala. I hope you guys are doing well. In this video, I am going to discuss the key difference between ASC 842 under US GAAP and IFRS 16. So when I say IFRS 16, please also use this as Ind AS 1116 as both are quite similar. Now, when we go straight into the topic, under IFRS 16, from a lessee perspective, there is one single lease arrangement. So there is no further bifurcation of finance and operating lease under IFRS 16. But in ASC 842, the lease is further categorized as either finance lease or operating lease. There is condition listed out in the standard, will not go into that detail. And if a finance lease condition is satisfied, you will categorize a particular lease as a finance lease, and if not, it will be classified as an operating lease. Now, what is the difference from an accounting perspective? So, accounting under IFRS 16 is quite similar to what we do for finance lease under ASC 842. So, you can broadly say that accounting under Ind AS 1116 or IFRS 16 is equal to accounting for finance lease under ASC 842. That is sorted. Now it's important to understand what is the difference in accounting between finance and operating lease under ASC 842. If we understand that, I think we will be able to understand the whole scenario. So what happens under finance lease in US GAAP or IFRS 16, we have front-loaded finance cost. So, since the lease obligation will be higher, in the initial years, the finance cost will be higher and it will decrease over the period as we make payment. And similarly, ROU amortization remains equal throughout the lease term because that is charged in a straight line basis. So let's say an example, we have 5 million of ROU capitalized and the lease period is 5 years. So ROU amortization expense for each year will be 1 million and finance cost for year 1, let's say, is 200k. So the expenses for first year will be 1.2 million. In year 2, let's say finance cost is 180k because we would have made some payment. So logically the interest expense gonna decrease. However, ROU amortization expense will remain same, 1 million. So the total expense for year 2 would be 1 million plus 180k. So if you see, the total expense in the initial year is higher and it will decline over the period. And that's why we say this as front loaded. Now going into operating lease. So in operating lease, there is a single lease cost, and how we compute that, let's say we need to make payment of 5 million throughout the lease period. So if we're gonna make total payment of 5 million and the year is 5 years, so our aim would be to charge 1 million of expense each year. Now in this scenario as well, the finance cost gonna remain same. The computation of finance cost will be similar to what we do for finance leases. So interest expenses, let's say for year 1 is 200k and we want to charge total of 1 million to expenses. Alright, because the total payment is 5 million, the period is 5 years, so each year we want to charge 1 million of expense. So our objective here is to charge 1 million to expense. 200k is coming from interest component, so balance 800k will be charged against ROU. So the ROU amortization would be 800k, interest component would be 200k, and that's how we will say total lease cost is 1 million. Now assume in the year 2 our interest cost is 117k. So still our target would be to charge 1 million to expenses. So 170k is coming from interest component. So balance 830k will be charged against ROU. And that's how we will achieve objective of charging 1 million as a lease cost in P&L. So this is the thing which does not exist in IFRS 16 or Ind AS 1116, and that's a unique accounting. So whenever you are doing IFRS 16, IFRS books conversion to US GAAP or vice versa, please make sure you identify all the operating leases in there and you make appropriate GAAP adjustment. I hope you like this video. See you in the next video. Take care. Bye bye.